Hot picks. We're looking at energy, and we're in for a treat. We're joined by Jay Hatfield, founder, CEO, and portfolio manager at Infrastructure Capital Advisors. Jay, we always get fresh analysis from you. We usually talk about the broad market and the economics, government balance sheet, etc., and inflation. But we're zeroing in on some stocks here, and you want to start off with Cheniere Energy, the big player in LNG exports.
Absolutely. And we do have that's a big holding in AMZA, which is our pipeline ETF. And I actually founded an MLP, so we do know the sector quite well. So there's three stocks, but just one theme, which is natural gas. As we all know, since we're in North America, North America is the primary repository for all natural gas. We used to have an inland sea that split North America. Sea is what forms hydrocarbons. So we have a massive excess of hydrocarbons. And so one way to play it is through exports. So Cheniere is the leading exporter of natural gas out of the US. They were the pioneer. They have more trains coming on. So they're going to be growing earnings, and they're going to continue to benefit from the arbitrage between global natural gas prices and North American natural gas prices.
We're tight for time. I'm sorry. You're not concerned about the risk of a global LNG glut?
You know, it's actually almost better if there's a global LNG glut, because not so much LNG glut, but as long as the U.S. prices and North American prices stay contained, there's still going to be an arbitrage. And normally, LNG does trade pretty close to oil. So as long as oil doesn't crash, there still should be an arbitrage. There's also long-term contracts. But in the long run, natural gas is the critical transition fuel. So we think any temporary excesses will be absorbed because it's just a very both flexible and very environmental fuel.
We're Targa Resources, TRGP in New York. What kind of player are they in energy, and why do you like them?
So they're in the Permian Basin. They're actually gathering and processing, so should be a little bit riskier business, but in the Permian, it's not. And they're benefiting from data centers being located in the Permian because basically gas is free there because the takeaway capacity is limited. So when those data centers get built, there'll be generation and they'll get better offtake prices for the gas they process. So great growth play in the best basin in North America, which is the Permian Basin in West Texas.
And then finally, Kinder Morgan, huge player in pipelines and energy infrastructure, kind of a supplier of Levi's jeans and picks and shovels.
Absolutely. So they're about 65% natural gas. So that finishes out the natural gas. So instead of processing it like TRGP, they just move it from places like the Permian down to companies like Cheniere for export, or to big natural gas plants that are powering the grid, particularly on the incremental side, data centers. So we think that that's the way to play energy. We're not super bullish about oil. We think they'll bounce off these lows. So low prices for oil and natural gas is actually good for North American exports. So throughput benefits from lower prices. So we don't want to gamble on the drillers or companies that have direct commodity exposure.
Jay, always great to talk to you, and thank you very much. Have a great weekend.
You too, Andrew. Thank you. Bye-bye.
Jay Hatfield of Infrastructure Capital Advisors.